Welcome back to the Neuro Finance Masterclass. This is actually day 54 of our 365 Days to Financial Freedom series. Now, over the last 53 days, we've been constructing your wealth machine literally brick by brick, right? You understand the math, you know the assets, and you've built your core defense. But today we have a profound revelation about the reality of the ecosystem you're actually trading in. This explainer is going to pull back the curtain on the completely hidden psychological ecosystem of the market. We're talking about institutional whales versus retail investors. This is what we call the whales game. And I promise you, by the time we finish, you're going to see the market in a completely new, deeply empowering light.
So here's our roadmap for today's explainer. We're hitting 5 key points. 1, the psychological battlefield. 2, meet the whales. 3, engineering the panic. 4, the FOMO trap. And finally, number 5, the architect's defense.
All right, let's dive right into section 1. The psychological battlefield, because the market, contrary to popular belief, is not a passive calculator.
Yeah, the very first illusion we need to absolutely shatter right now is this idea that the stock and crypto markets just tick up and down based strictly on rational spreadsheets and earnings reports. That is a complete myth. The reality is that these markets are intense, cutthroat, psychological battlefields. And to survive, you need to know exactly who is fighting. On one side, we have what the industry calls the smart money. These are the massive institutional whales.
Right, and on the other side, well, the industry brutally refers to their opponents as dumb money. And that's the retail investors. It's your classic David versus Goliath conflict. We're talking about incredibly resourced institutional players matched up against you, the everyday person sitting on the couch with a smartphone. I know, it sounds completely unfair, but Goliath actually has a massive, glaring weakness.
Which brings us to section 2, meet the whales and the vulnerability of massive capital. So what is a whale exactly? It's a colossal financial entity. Think of a massive hedge fund, a global bank, or some billionaire controlling billions in capital. But here's the major vulnerability of having that much cash. Their sheer size means they literally cannot move silently. When you or I buy a few shares, no one notices. But when a whale wants to take a position, the entire ocean shifts.
Exactly. Imagine wanting to buy, say, $500 million worth of a single stock. A whale absolutely cannot just log into an app and click buy for that amount. If they do that, the sudden, overwhelming demand will instantly skyrocket the price.
Right, it's basic supply and demand. By the time their massive order is actually fully filled, they'll have driven the price up so incredibly high that they end up paying a massive premium. They are literally trapped by their own size. So because of that, they need a completely different strategy.
And this introduces the absolute holy grail for institutional predators, liquidity. Simply put, liquidity is the presence of thousands of people willing to sell their assets at the exact moment a whale wants to buy them. Having that liquidity is the only thing that prevents that massive price premium we just talked about. But here's the catch. Everyday people don't just randomly decide to sell hundreds of millions of dollars worth of stock out of nowhere, right? So the whales have to create that environment. They have to actively use psychological manipulation against the retail market to force that liquidity into existence.
That leads us right into section 3, engineering the panic. This is what's known as the liquidity hunt.
Okay, so this is the intense and honestly predatory mechanic whales use to get what they want. If they need you to sell your shares so they can buy them on the cheap, they literally manufacture artificial panic to steal retail assets at a massive discount.
Let's break it down. Step 1, the whale aggressively sells a small portion of their own holdings, just enough to trigger a terrifying, sharp drop on the price chart.
Then comes step 2. The financial media immediately latches onto those giant red charts and reports a crash, blasting out terrifying, sensational headlines everywhere.
Which leads to step 3. Retail investors, who lack the neurofitness we've been building in this masterclass, feel absolute terror. They panic sell their assets at a massive loss just to stop the emotional pain.
And here's the sick punchline, step 4. Who do you think is standing at the bottom, quietly scooping up all those perfectly good, heavily discounted shares? The whale. They literally just weaponized fear to generate the liquidity they desperately needed.
Now for the flip side, section 4, the FOMO trap, also known as the exit strategy.
So the whales have acquired their massive position at a huge discount. But, that's only half the game. Fast forward a bit, once they have doubled or tripled their money, they can't just click sell on billions of dollars of stock either, or they'd crash the price before locking in their own profits. They need another psychological trap to get out. Which leads us to a absolutely critical question. How does this whole cycle work in reverse? Think about it. If panic and fear were used to manufacture sellers, what emotion do the whales need to manufacture to create thousands of eager buyers? They need to engineer absolute euphoria.
So here is the exact timeline of the FOMO trap. Step 1. The whale stops suppressing the asset and just lets the price run up naturally. Suddenly, the green candles start looking beautiful.
Step 2. The media totally shifts its tone. Suddenly, they're publishing glowing stories about how this asset is the next big thing and predicting limitless, sky-high growth.
Step 3. The amateur retail investors sitting at home experience massive FOMO, the fear of missing out. They rush in, completely ignoring the totally inflated price because they want to get rich quick.
And finally, step 4. This blind rush to buy at all-time highs provides the exact liquidity the whales need to exit. The whale quietly unloads their massive position directly to the amateurs. The whale walks away with the profit, and the retail investor is left holding the bag when the price inevitably crashes back down.
So, how do we protect ourselves? Section 5, the architect's defense, refusing to play a rigged game. Now, I wouldn't blame you if you're feeling a bit of anger right now. You honestly should. But here is where we shift to deep, actionable empowerment. How does an architect of wealth actually survive a game that is so clearly rigged against them? Simple. By bypassing Goliath entirely. You refuse to play their game on their terms.
I love this stoic realization. You cannot fight a whale, but you can swim right beside it.
Exactly. You don't have billions of dollars to manipulate the market, but you do have the automated dollar-cost averaging system we set up back on day 20. By strictly utilizing your automated DCA system, you naturally buy the panic discounts right alongside the whales. When they trigger our crash, your system doesn't feel fear, it just mechanically executes the purchase at a cheaper price, effectively turning you into a mini will. The entire dumb money mindset is about reacting to short-term waves, right? Constantly getting thrown around by engineered panic on the way down and engineered euphoria on the way up. But true neurofitness, that means riding the deep economic currents. It means ignoring the chaotic, manufactured surface waves entirely and instead trusting your long-term automated system for growth. When the whales engineer euphoria to trap everyone else, your neurofitness keeps you perfectly calm. You just stick to the plan.
Well, we've reached the end of today's explainer, and I want to leave you with a choice that is absolutely going to define your financial future. Will you remain blind to the psychological battlefield and continue to be the whale's liquidity? Or will you activate your defense system, ignore the manufactured noise, and become the architect of your own wealth?
The system is yours for the taking. It's time to permanently step out of the dumb money trap. Stay focused, stay disciplined, and we will see you right back here in the next masterclass.